Welcome to today's session of 20 for 20 in 2020. This is a series that I created so that individuals would get to know various professionals that they may wish to work with when they're making important decisions in their life. And I thought this would be very helpful. I'm going to be speaking to 20 professionals, asking 20 questions and getting all this done before the end of the year. As you may know, I'm Ella Newman, and I am a trusted insurance advisor with the Norton Advisory Group. And I help people make effective decisions about retirement planning, estate planning, business succession planning, and long-term care using insurance strategies that are very appropriate to help them achieve the important decisions in their lives as well. And today I am very fortunate to have a special guest, Carin Pai, who is a CFA and Executive Vice President at Fiduciary Trust Company International, where she heads up their portfolio management and equity strategy group. I met Carin several years ago when I worked at Fiduciary Trust Company International as a managing director. And I used to bring my clients to her when they needed investment portfolio advice. And I was always thrilled with the way she worked with them and the outcomes and the interactions that would take place. So today I'm going to have an opportunity to introduce her to you and let her tell you about all the things she does. First of all, let me say hi, and how are you doing balancing life in a pandemic at work and family and all that? Carin?
Hi, Ella. Hi. Nice to see you. I think everyone is adapting, and it's not an easy time. Certainly interesting, but comes with a lot of challenges. But I'm doing well, and my family's doing well and healthy, so all is good.
Great, thank you. So let's get started with our 20 questions. All right, the first question is, what is the primary focus of your role?
So, Ella, I oversee the team of portfolio managers who work with clients to determine their goals and the appropriate asset allocation and investment strategy to achieve those goals. In addition, I lead the firm's equity process and strategy, as you mentioned, and that includes sector positioning and stock selection. With these responsibilities, I play a significant role in our asset allocation committee, as well as the management of our client business.
Perfect. Now, what led you to this career?
Growing up, I actually didn't imagine that I would be in finance or investments. My interests were more on the creative side, but my dad, like many Asian parents, thought I should become a doctor or a lawyer. It wasn't until my undergrad at Albany that I discovered I really enjoyed and did well in my finance and business courses. I was then recruited to work at Prudential Securities in the early 90s in their management program, where I did equity research, trading, and sales, which was really the foundation for what I do today. The 90s were exciting times in the stock market.
I remember those days. So, how did you get to work at Fiduciary?
Well, I interviewed actually at a number of jobs and number of firms, including Merrill Lynch and a boutique muni bond firm back in '96. Luckily, I found Fiduciary Trust, which had a junior position in portfolio management at that time. It was my long-term career plan at that time to become a portfolio manager. I was fortunate in that I worked very closely with the CIO at that time, Jeremy Beggs, for many years, whom I learned a great deal from.
Terrific. Yes, I'd heard a lot of nice things about him. He wasn't there when I first joined.
Yeah.
What are some of the highlights of your total career experience?
So I think there were many highlights, but I was really ecstatic when I officially became a portfolio manager in 1999 with my own book of clients. Soon after, though, the dot-com bubble burst, And it was the fastest learning curve I could have been on. But I built a lot of trust with clients during that downturn. I would consider this, I would also consider, this year to be a highlight for sure. This has been a very challenging year with the pandemic in terms of the financial market swings, but also in terms of managing a team in a remote environment. I'm so pleased to say that we have stellar performance, investment performance across the board this year. We're beating our benchmarks by a wide margin, and it's the fifth consecutive year of outperformance for equities versus the S&P for us.
That's fantastic. Okay. Now, what type of clients do you tend to work with?
We work mostly with high net worth individuals and multi-generational families. However, we do have institutions such as foundations and endowments as well.
Okay. What are some of the problems or issues that you help your clients specifically address?
Primarily, we help our clients with devising their overall wealth and investment plan, solving issues such as current cash flow needs, retirement planning, gifting assets to their spouses, children, or grandchildren, or charity giving. Most of these plans do involve tax and trust planning, and we have in-house tax and trust advisors who provide their expertise along with investment management services.
Right. Which are very often roles that we help our clients with as well. So, because sometimes it's a combination of the planning and the insurance strategies and other tactics that are required to work together on for that result that they have to achieve.
Absolutely.
Okay, so in terms of your role, would you consider the organization, I know it's in the name, specifically acting as a fiduciary?
Yes, absolutely. We are a fiduciary. And a fiduciary means that we have a legal obligation to put our clients' interests first, and that we are acting on behalf of our clients and the beneficiaries involved. This is a very important distinction for fiduciary trust.
That's very important. I didn't mention earlier, but at the end of our session, I'm going to be talking about something I can do for people in terms of doing a fiduciary review for them. So we'll talk about that later. Tell us more about your qualifications and credentials.
I'm not going to try to give out my age, but I have over 25 years of experience in the investment management industry. In addition to getting my degree from Albany School of Business, I am a Chartered Financial Analyst charter holder, which you mentioned, which is a designation specifically for investment analysts and advisors. One of the best experiences, I would say, for me also was completing a program at Harvard Business School for executives. And I did a program for investment management and risk management. I would highly recommend it for anyone who is in the business to do executive continuing education programs. And this one in particular was extremely helpful for me. It was it was a course where all the participants were professionals from the industry, in which we shared our experiences and we debated about real case studies on asset allocation and risk management. And from there, a lot of people traditionally view fixed income as a risk mitigator in portfolios, which is true. But I think oftentimes people forget about cash and how important cash could be as a risk mitigator, and that it's an asset class that has zero correlation to other asset classes. So I think that that's important to keep in mind.
That is very important. Now, do you actively help your clients with their investment plan?
Yes, in every way. The most important step is in helping clients develop their goals and setting the investment plan. The asset allocation and strategy will be dependent on what the objectives and guidelines are. This is part of the investment policy statement that we develop with our clients, and it should be established at the onset and be reviewed regularly.
That sounds very important and appropriate. Um, what's it like to work with you initially and then in the long run?
Initially, I would say that there's a great deal of communication flow. I think it's really important to keep the communication channel open. This is a point in time where we get to know our clients and get a sense of their risk tolerance and preferences, which oftentimes it's assessed over time, and it's something that is more about how they react to different situations, what's important to them at different times and different market periods. So it's really important in the beginning to really pay attention to these factors. And it's an information gathering period. Over time, we build trust, and we are always, adapting to our client needs. And it's a mutual relationship.
Very good. And do you provide a formal updating and reviews and maintenance programs for your clients?
Yes, very much so. We provide regular portfolio and goals reviews with our clients, and we would adjust investment plans or their wealth plans as needed based on their circumstances. So, whenever there is a change in life situations, whether it's divorce or having children, or changing jobs or retirement, these are definitely periods and situations where we would review the strategic asset allocation, we would review the objectives, but there's an ongoing monitoring of portfolios and financial plans to make sure that we're on track.
Mhm. That's very helpful and important and a good way to work with your clients. And I think most professionals want to establish that kind of way of working with clients as we do in my organization as well. It makes most sense.
Mhm.
Absolutely. Now, how do you determine your fees and what would they include?
Our fees are based on a percentage of assets, so our interests are aligned with our clients. We provide both wealth advisory services and investment management services. We do both for most of our clients, but our fees are commensurate with the service that we provide.
Mhm. Okay. And what is your relationship like with your clients?
I've worked with most of my clients for over 20 years, but do have some newer clients as well. The client relationships make everything that we do tangible. We oftentimes become part of the family with many of our clients. To me, I think it's a true privilege to manage our clients' assets and that they entrust their personal finances and other aspects of their lives with me and the firm. I'm sure you
I
feel the same way.
absolutely. It's so important to create that kind of a relationship, and that long-term trust is so important. And that's what I've always enjoyed most about the work I've done in the past and present. Now, in terms of what you include in creating a client's investment plan, and does that change?
Sure. So, I think the first thing is we have to understand the total picture of our client assets and how the assets are structured. Whether it's in their personal name and joint name, or whether it is in a structure like an LLC or a trust structure.
Mhm.
Understanding the entity or the way that the assets are structured is important because that has then implications for taxes. It has implications for liquidity, and sometimes it may involve some legal considerations. So it's the basic principles of understanding our clients' time horizon, their liquidity needs, their risk tolerance, and any type of near-term and long-term distribution needs. So those are the basic elements that we would include in the investment plan, and we devise an appropriate asset allocation mix based on those factors to develop a strategy that's going to achieve their goals.
Mm-hmm. That's totally appropriate and makes sense. Okay, what would you say your investment philosophy is?
Uh, our investment philosophy, and I think, my investment philosophy is very much aligned with the firm. And our philosophy really centers around three elements. We have a quality bias, we believe in transparency, and we have a strong valuation discipline. We have a preference for high quality, and we're willing to pay up for quality because we view this as lower risk and a longer term investment. We also like transparency because we need to understand what we own and why we own it. It oftentimes will help us make a better decision and allows us to have conviction when sometimes things may not work out in the short run. So having that transparency and really understanding why we own something is, from our perspective, critical. It also goes to assessing, some of the funds and the managers that we might recommend for our clients as well, that we have to understand their process and we have to understand their philosophy as well. So transparency, we believe, is really critical in the sense that we know where the results are coming from. Finally, I mentioned having a strong valuation discipline, and I think that, oftentimes you can identify a good investment, but you have to pay the right price, because if you overpay, then it's hard to obviously make return. So having valuation discipline is critical because it helps skew the risk return in your favor.
Well, that sounds like a sound approach. And what other issues do you address, such as tax consequences?
Tax efficiency and tax management is a key component of our wealth planning and investment decisions. We also help our clients on educating the next generation and also providing foundation work. So I mentioned earlier the importance of understanding the structure of assets, because that oftentimes will uh, uh, determine or drive the investment mix, and it will also determine the type of investments that we put into portfolios, because we're always looking at results on an after tax lens.
Right, which feeds into the next question as well, which is what asset allocation would you be using for a particular client?
So it depends on the client's objective, and clients have varying objectives. Our asset allocation strategies are really designed to meet a range of objectives for our clients, from very conservative objectives like capital preservation, which is roughly 40% in equities, to a objective for high growth, which is about 90% in equities. Working with clients to determine the appropriate long-term strategic allocation is an important first step, and we have to monitor how the portfolios are performing on a regular basis to also then incorporate any short-term or near-term tactical shifts or views that we might have based on market conditions.
That feeds right into our next question, which is how do you use investment benchmarks, and which ones do you use to focus when you focus on those?
Right. Benchmarks should be aligned with the investment objective, and it should be based on the appropriate asset class. We use benchmarks which reflect the strategic asset allocation mix as a standard for comparing the total return of a portfolio. Most of our clients, and sometimes, they will often refer to the Dow or the S&P as a benchmark for their portfolio. But we think it's important to make sure that this equity benchmark is compared to the equity segment of the portfolio and not the total portfolio return if the objective isn't 100% equities or a high growth portfolio. We have to make sure that it's an apples to apples comparison. So if it's a balanced portfolio, the benchmark for the total portfolio return should be something like 50 or 60% of an equity index, and 40% roughly of a fixed income benchmark, or it may even include a benchmark for alternative asset classes.
That's an important approach, again, to take, because obviously those different benchmarks and comparisons are significant and often are not always understood by some people outside of the investment universe. So clarifying why you're using which benchmarks and the way you did is an important factor. Now, if you're not around to help your clients in your absence, who would be involved from your office to work with them?
Sure. As an investment leader, my colleagues on the asset allocation committee would always be available to clients. And our portfolio managers work on teams with usually one or two other portfolio managers. And there are usually relationship managers and associates who can help and be a backup. It is very much of a team approach at Fiduciary, and our clients have access to a broad range of expertise.
Perfect. Okay, so now we're actually up to our last question. And this one's a little bit different. It's, what can you tell us about yourself that we cannot find out on the internet?
Well, Ella, I like to stay active and I enjoy the outdoors. So, golf, tennis, and running. I like to stay healthy. But something I don't, tell a lot of people is that I like to paint. It's it's something, to do when it's gloomy outside. I find it to be therapeutic, and there's a sense of accomplishment to finish a project.
As I may or may not have told you in the past, I like to do that as well. So I totally can appreciate that and understand that. And thank you for sharing that with us.
I can't say I'm very good at it, but I enjoy doing it.
That's the key. That is definitely the key. No question about it. Well, this has been great. And I thank you so much for going through this question and answer period with us. But at this point, I'd like you to tell everybody how you can be reached. What's the best way to contact you?
Sure. The best way to contact me would be through email. My email address is cpai@ftci.com. But I would also encourage everyone to, take a look at Fiduciary Trust's website, which has information about our firm. It has our market views, strategies, and so that's a good place to start.
Terrific. That's wonderful. So anyway, I wanted to again thank you. And I did try to indicate that I had some more information to share with our audience about something I can do for them. And what I'd like to offer is a complimentary fiduciary review of their insurance portfolios. Now, this is particularly important at this point in time when we're reaching the year end, and especially in terms of our current economic climate and interest rate strategies that are important to implement if needed, because interest rates are at an all-time low, and there are some business succession planning strategies and estate planning strategies that use insurance but can use premium financing. And if you're using premium financing and taking advantage of these low interest rates, the outcomes can be truly dramatic in a very positive way. So it's certainly worth a conversation. Plus, these low interest rates that we're experiencing are something you want to look at, and they're having an impact on the insurance company providers and changing the pricing and the way these products are being put in place right now and will be in the coming year. So it's important to look at your current holdings and have a professional like myself take a look, and I'd be happy to do that for you. You can reach out to me at ella@nortonadvisorygroup.com, or go to my website at Norton Advisory Group, and I would offer a free complimentary review and set up a virtual appointment with you. And a lot of changes are going to be taking place in the coming year as a result of the election and all these changes, which can have a strong influence on some of these state planning strategies that you currently have in place that may be changing. Again, these are things that we can review with you and come up with an appropriate approach that makes sense at this time. So please take a look, and I will be doing more 20 for 2020 interviews with other professionals. So please look at LinkedIn, where I'll be posting this interview as well as future ones. And I will be putting them in other places as well. And so please stay tuned. And most importantly, stay healthy. And I wish you a happy holiday season. And thank you, Carin, and thank you, audience, for being with us today.
Thank you so much, Ella. Happy holidays to you.
Thank you, Carin.